Hey everyone, welcome back to the IX channel. Today we're diving into something that sounds kind of fancy, but is super important: Consumer Price Index, or CPI. Now, don't worry if you've never heard of it before or it sounds a bit intimidating. I will break it down for you, and by end of this video, you'll know exactly why everyone's always talking about it. Alright, so let's start with the basics. The CPI is basically a way to measure how much the prices of everyday things change over time. Think about the stuff you buy regularly, like groceries, gas, clothes, or even movie tickets. The government takes a basket of all these items, like a shopping basket full of goods and services, and tracks how the prices go up or down each month. When prices go up, we call that inflation. When prices go down, which is rare but can happen, is called deflation. The CPI shows us how much inflation or deflation is happening in the economy by tracking those prices changes. So why should you care? Well, if prices go up but its salary stays the same, that means you can buy less with the same amount of money. Not fun, right? That's why CPI matters to everyday people. Now, let's talk about how the CPI affects the economy. You know, when you hear on the news that inflation is getting out of control, that's usually based on CPI. If the CPI is rising, it means inflation is going up. And inflation can be tricky. A little bit inflation is actually normal and even good for the economy. It encourages spending and investment. But if inflation gets too high, it can lead to all sorts of problems. Prices for basic things like food, housing, and gas might rise faster than people's wages, which makes life expensive. On the flip side, if CPI shows that prices are falling or deflation is happening, it sounds great, but it can actually be a sign of trouble too. It can mean that people are spending less and businesses are struggling, which can lead to a weaker economy. Governments and central banks like the Federal Reserve in the US use CPI data to make big decisions. If inflation is too high, they might raise interest rates to cool things down. If you want to know more about interest rates, we explain it in another video on our channel. Alright, let's shift to how CPI affects financial markets. Imagine you're an investor and you hear that inflation is rising. What do? Well, inflation can spook the stock market because rising prices mean higher costs for companies. Higher costs can mean lower profits, which investors don't like. So when CPI shows inflation is heating up, stock market often get a little jittery and you might see stock prices dip. But it's not all bad. Some industries actually do well when inflation rises, like commodities, think gold or oil, because their prices often go up with inflation, and certain companies can pass their higher cost on the customers, so their profits don't take as big of a hit. Bond markets are also heavily influenced by CPI. If inflation is high, the interest on new bonds goes up to compensate for the loss of purchasing power. So rising CPI often means bond yields increase, and that changes how investors view their portfolios. Now, if you're into Forex, CPI is something you should keep an eye on. Here's why. When a country's inflation rate is high, its currency might lose value compared to other currencies. Why? Because if your money buys less stuff at home, it also buys less stuff abroad. So higher CPI numbers can make a currency less attractive to foreign investors, which leads to depreciation of that currency. On the flip side, if a country has low and stable inflation, according to its CPI, its currency might become more attractive because it seems more stable and reliable. Traders in the Forex market use CPI data to predict how central banks will adjust interest rates. For example, if the CPI is rising fast, traders might expect the central bank to raise interest rates, which could strengthen the currency in the short term. So let's sum it up. CPI measures how prices for everyday things are changing. It gives us a snapshot of inflation or deflation, and this affects everything from our daily lives to the overall economy, stock and bond markets, and even Forex. Understanding CPI helps you get a sense of where the economy might be headed and how that could impact your investments. Thanks for watching. If you found this video helpful, don't forget to hit the like button and make sure you're subscribed for more financial tips and insights. Got questions about CPI or want to know more about investing? Drop them in the comments below and I'll be happy to help. Until the next video, wishing you both a wealthy heart and a healthy wallet.